Hey, Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. Today, I'm looking at a futures day trading tips series, but this is a continuation of blow-off volume. And what I'm going to entitle this, and the blog post will be called Blow-Off Volume Revisited when you look at it. So if you put that in the search bar, Blow-Off Volume Revisited, if you're watching this on YouTube, then you'll find it on my blog at 123daytrade.com. Just in that search bar off on the side. Anyway, what does it look like? Well, it doesn't happen very often. In fact, it happens so infrequently that I forgot how to go about it when I was trading at my Top Step Trader account. Now, let's not worry about the other stuff. But anyway, so at Top Step Trader, where I am showing some of my live trading, I caught into 47 ticks before I was able to know that the market wanted to go up. Well, and I talked about why. So if you want to look at why, just look at futures training that I put together. Basically, long story short, I didn't pay attention to my own set of rules and wait the 1 minute mark out. All right, so I would have been able, long story short, I should have caught the short, and then I saw the long. So that was unfortunate, but it's the way it works, and thank goodness I still know what I'm doing, even though I didn't catch the trade today, and I knew what was going to happen, and it was all based upon this bar right there that you're looking at right here. What I should have done is force the market to get above here and only take a long above that mark and no longs until I see a bottoming pattern or basically buying come into the market. And this is why I want to revisit this again, because there would only be 2 entries to get long today, as far as what you'd be looking at. And 1 long entry you shouldn't even have bothered with, because it never went above this before it fell underneath. So the only signal preliminarily that you could have taken would have been a short off of a failure bar within this 1 minute range. If you missed that failure, which you shouldn't be concerned about, because what you're looking for is a bottoming pattern, and this bottoming pattern is signified by red volume coming in, or buying volume. Let me show you exactly what it looks like. This is what buying volume looks like when it comes in. And so what you see is this is the 400 volume bar, but then you see all of this red bar volume coming in here. 1, 2, 3, 4, 5, 6, 7, 8 times we run over the mark here, and this happens between 9:50 to 9:52. So although the market is going down here, they're buying this market down. They're buying it. So it looks like it's stop running, but it's not. The reason that it's not stop running is that we already saw our stop blow off volume here. So this ends up being a signal that the market is going to recover. It should recover. Now, it has to form its Elliott wave pattern, but until, and see, there was some, it kind of tricked me out here, but there wasn't enough, and it continued to move down. So, it looked like maybe through here it was a good signal, but it never went above. So that was not a good signal through there. Finally, you start seeing it coming in through here, and you could have caught a breakout here at this point. So it's like 43.95, and if you would have run with a 20 tick stop loss that I recommend on blow off volume, you got fortunate today. If you didn't catch it, now 43.95, 20 tick stop loss would have brought it down to 43.75, right? So here's 95, 85, 75. So you would have been lucky enough to stay in the trade if you would have caught it. So here is your 1 point. Let me bring my arrows over. Blow off volume, you got to run with, normally you should run with a 20 tick stop loss. And if you don't, it's not the end of the world, but you've got to look. So let's say if you ran with a 10 tick stop loss, well, obviously you got hit, and then you're still looking. If the market gets back above this area, it still looks good, even though this is basically a double bottom, right? So right here is 78, and right here is 77. It only goes down 1 tick below, so it's still, the long signal is still valid if it comes back up. So if you would have taken, say, a 10 tick hit here, which is okay, if you didn't want to risk the whole 20 ticks, then you're down 10 and then you catch it on its way back up through here. Or you wait for it to crest above this mark here and then you catch it. So there was plenty of opportunity to catch this long. What you have to look for, though, is this right here. And this is the part that, since it happens so infrequently, I missed it. So I wish I could have go back to myself and say, you know, David, this is what it looks like. But it doesn't happen very often. Blow off volume, BOF, does not happen very often. When you see it, it's a really good signal that the market's ready to rock and roll. In this case, since it was red, we want to go long. If it would have been a blue volume and the market would have went up, then I'd have been looking to short it on the way down. But today, it was a big red volume bar of over 5,000 in volume. It goes down and then eventually it goes back up. It takes some time, it takes some patience to find it, but it was there. And I just, you know, it's cool to see it and to know that your stuff works. So, and just so you see it, look, I mean, the market just goes from here at 43.95, and if you would have been able to hold all your contracts, or at least a portion of your contracts, it runs all the way up here to 41. It runs a 6p target or even a 7p target today on its way up. Most likely, though, you would have covered some of your trades based on this volume here. This is an HVS skyscraper, or HVS sky, and you would have been covering right in this area. So this would have been a good exit point right through here. Let me draw this so you can see it. So this is going up. This announces that there's some selling pressure coming in the market, and then when it crests underneath there, this is a good place right in there to cover. So that wouldn't have been a bad trade either, right? That would have been what, 100 ticks, I think, or close to it. Well, not 100, but at least 80. So it's about 80 ticks or so to run it up through there. So it certainly had 3p worth of profit to run at least one contract in there. And this is the kind of stuff that I normally pride myself in being able to catch. So knowing what to look for. The last time blow off volume happened, it was a short, and the shorts obviously go down quicker. And I waited the minute out and I was able to catch it. But this time I didn't wait the minute out, and everything else kind of fell apart after that. So if I would have been, you know, if I'd have waited the minute, if I would have made the market move up, which it never did, over that 44 mark that we saw, and then if I waited for buying pressure to come back in the market, then go long, things would have been a lot different for me today than the way they turned out. Now, why do I record this? Well, I record it for two reasons. One, because I'm trying to help you, and two, because I have forgetfulness. I have adult attention disorder as I get older, and I record this so that I can go back and watch it again, so I remember that this is what it looks like. I know what blow-off volume looks like, but what I forgot about was that I needed the market to move above that point that I put in on the 1 minute chart, or wait for buying pressure to come in and then get in. So now I know what to do. Hopefully you understand what to do when you see it from this point forward. I'll put it into the Futures Day Trading Tip series, and we'll, I don't know, maybe we'll call this a continuation or tip number 12. Yeah, what the hell. We'll call it tip number 12. Blow-off volume revisited, tip number 12. Futures tips number 12. This is a Dave Knight here at 123 Day Trade. God bless, take care, and I'll see you on the next video. Bye for now.